Stop messing around, stop fooling around, stop delaying, stop procrastinating. Get up, get out, get it done. Everything is possible, nothing is a problem, and anything can be overcome. I just get my ass up out of bed, I get my shit together, and I get out and I start the fight. And that will transform you from a mere mortal into a superhuman being. I've never, ever, ever met anybody who told me that they got rich watching their IRA or their 401k.
Welcome back to the Daily Cash Flow. Happy Tuesday, Peter. Peter, did you know that today is our 99th episode?
No, it's not.
It is.
Is it really?
Yeah, we've done this 99 times.
I didn't know that.
Yeah.
Although I have I have two friends who tell me that they listen to these podcasts.
Wonderful.
Thank you, guys.
Yeah.
You know who you are. And they always reference them by the number.
Yeah.
I mean, you and I don't even do that.
That's true. Yeah, I actually don't keep account except for these kind of coming up to the milestones. So
I'll get a text from one of them. I just listened to 92.
Yeah, and you're scratching your head. You're like, which one was 92?
Yeah. I think it's great.
Yeah.
Thank you so much, George. 99.
Yeah, thank you. Yeah,
and thank you for, if you've been a part of this journey and have listened to every single podcast, I want to hear from you.
Yeah, please. That'd be awesome to hear some testimonials.
My mom will text us.
Exactly.
We'll get a DM from my mom. Yeah. Hi, Peter. I'm so proud of you. 99.
99. So is anything you want to talk about before we get into the meat and potatoes of today? I know the holidays were
George,
just
I'm going to let you dictate
stuff.
the flow of this, because if you leave it up to me, it's going to be a hot mess. And I'm so my geese are cooking in so many different directions and ways. I can't. Don't ask me to make a decision on that.
Totally. That's a post-Thanksgiving, so we're just getting into it. So the first thing I wanted to ask you about was this Department of Justice lawsuit that's coming into play with Missouri and Illinois. Like there's these antitrust lawsuits happening there with the real estate, like the
brokerage lawsuits.
Yes, the brokerage lawsuits. So Missouri has already been decided. Collusion was decided there. And then I think Illinois is still up for debate.
Yeah, and many other states now too.
So Department of Justice is reportedly considering a case to dismantle the commission sharing structures entirely. I wanted to read this one quote from the Redfin CEO, Glenn Kelman. He said that half the real estate agents in this country will be unemployed if this occurs.
More than half, if you ask me.
I'm asking you, what do you think of this? Where does this come from? Where does this go?
Well, I think the judge in this case got it wrong. I don't think they got it right at all. I think it's going to become right under appeal. That's my hope.
Yeah.
I think that way more than 50% of real estate brokers are going to be unemployed because, George, in every market, 90% of the real estate is sold by 10% of the brokers. So that leaves the other 90% of the brokers fighting for whatever the remaining scraps are. I think that number is going to be more like 65, 75, 80% of the brokers are going to be underwater and unemployed. Right. And I think that's obviously a problem for the economy. Mm-hmm. But here's who it's a bigger problem for. It's a bigger problem for the consumer. Ironically, right, because it's an antitrust case, they're saying this brokerage sharing agreement, which is typical in our industry here in this country, it's not good for the consumer. I think it is good for the consumer. Here's why. It's the single largest asset, 99.9% of us, that will ever purchase in our lifetime. A home. And this ruling puts us in the position of having to go it alone. What they're telling us is if you want a buyer's agent to represent you as a buyer, you have to go out and hire them yourselves. So maybe I'll shop around, maybe I'll get competitive fees and pricing. That would be good for me as a consumer. But more often than not, many consumers and home buyers are going to opt out of having buyer representation. That's the problem. That is what's going to cause deals to get done which are not good for the consumer and for outcomes that aren't as good for the consumer. I can tell you as a purchaser of real estate, both residential for my personal life and commercial property for my business life, I need a broker. I need an agent representing me. The seller's agent isn't going to represent me as a buyer. I need someone representing me. I don't want to talk to the seller's agent. I don't want to talk to the seller. I want to talk to my person. I need a person navigating the waters who can be good cop, bad cop, like whatever we decide the approach is going to be. Like I need someone to deliver a message, to receive a message, to dissect it, to tell me what the deal is if it's something that I don't know. Maybe some market data, maybe some comps that are about to close that I'm not familiar with yet. All of this stuff guides our decisions when we're buying real estate. Again, the single largest amount of money for any purchase that we'll throw down in our lives. And these rulings limit the representation and benefit that us as consumers and home purchasers are going to ultimately have. For those reasons, I think the judge got it completely wrong. The advocates for the rulings are going to say, oh, well, it reduces the average commissions from about 5.5% down to maybe 2.5% or 3%. And right. Hey, won't that be great for the consumer because it won't inflate home prices so much? I mean, I just don't see it like that. If I'm buying a house under the normal old way, I can assume that the listing agent's going to have a 5 or 5.5% commission baked into their listing agreement. I don't pay that. The seller pays that. Okay, so now they're going to say, oh, well, the seller has to inflate the asking price by a number enough to be able to afford the 5 or 5.5% commission. You know what? I want an agent representing me because I'm not going to get a great price if I don't have representation. I'm a layman. I'm a normal person. I'm a small business owner. I'm a plumber. I'm a teacher. I'm a truck driver. I'm like whatever I am, I'm not a professional real estate buyer.
Right.
Maybe I've done it once or twice in my life, you know, or it's my first time and I've never done it and I'm not going to have representation. Big mistake, big problem. It completely escapes me how this is an antitrust case, which is good for the consumer. To me, the shout's bad for the consumer. And we're talking about 2 or 2.5 or 3%, right?
Yeah.
3% of the home that the buyer is going to have to pay. So if there's no sharing of the commissions, now the listing broker can charge that same 5%, keep all of it for themselves, and tell the buyer that they've got to go get their own representation at their own cost. How is that good for the consumer?
Right.
So either the buyer's going to pay for representation through the commission sharing of the old way, or they're going to pay for representation on their own because they're going to go hire and engage their own buyer's representative, and they'll have to pay that person directly. I mean, either way, the consumer is paying or should pay for buyer representation. I just don't see what this case solves.
Yeah.
Now they're going to say, oh, well, we're the only country in the world that does it like this. All these other countries don't do it like that. And you know, we have a housing crisis here and housing is too expensive, and this is really going to help housing not be as expensive. Disagree. Disagree. I mean, look at the UK. That's one of the countries that these articles all cite and that these judges and advocates for the ruling all cite. United Kingdom. I mean, real estate's expensive in the United Kingdom.
Very expensive, yeah.
You know, so what are we talking about? You know, it all comes down to supply and demand. I think this is just theater. You want to lower housing costs? You know, control the Fed, introduce more supply into the market, change zoning laws, make it easier to build, rezone our cities and suburbs, have a yes in my backyard, not a no in my backyard mentality. Get stuff built, get it done. Remove the permitting process delays so that it's not 3 or 4 years to, like, you know, to get permits. And it's crazy. That stuff will lower housing costs. Build more supply. That'll lower housing costs.
Yeah.
You know, an antitrust case that tells me I'm going to spend 3% less on a home because now I don't have to pay the seller to pay the buyer's agent, but I have to go pay the buyer's agent myself. Seems like I'm still paying for a buyer's agent. And you should pay for a buyer's agent. Always have an agent represent you. Do not go this alone. You have to go through the inspections process. You need a representative. You have to go through the financing process. You need a representative. You have to negotiate with the seller. You need a representative. You can't do that on your own. 99.9% of you out there do not have the skill set or ability or capability or experience to do all of that on your own. And it's the biggest thing you'll ever buy in your life. I mean, are you kidding me?
Yeah.
I'm happy to pay someone 3% if they get me the best possible deal. As a buyer of a house, of a piece of real estate, I'm looking for the best possible deal. Not just in the purchase price, because obviously that's a big part of it, but like all the other things. Right? Contracts to buy real estate are complicated. They involve terms, price, duration, representations, and warranties. Who's navigating that for you? Zero chance this is good for the consumer.
About a year ago, Bloomberg had an article that economists were forecasting 100% chance of recession within a year. We spoke a few months ago about it feeling like a recession. We both felt certain aspects of that. On the other hand, employers exceeded expectations by,
Mixed
over
data.
300,000. Yeah, exactly. And so, Morgan Stanley's raising their growth outlook. There's all these kind of things. How helpful is it to focus on forecasts? How much attention do you pay to people that are forecasting things like a recession? How do you think about cycles like that? And how do you compare it to data and whatnot?
Well, I pay attention to the people that have the experience. It depends on who's doing the forecasting and preaching the data.
Yeah.
I mean, if you're a young person recently out of school and it's your first or second job and you just getting your proverbial cherry popped right now, I mean, I don't know that I'm really listening to you.
Right.
But if Jamie Dimon wants to tell me about what he thinks is going to be happening in the economy, believe me, I'm listening. Every time there's a new economic cycle, it's none of the same data in exactly the same way. It's like a bunch of the same data and then a few new things which we've never seen before. Right. So this time around, we're seeing strong labor markets. I mean, despite the fact that interest rates are crazy high and despite the fact that the borrowing environment has become very challenging and that there's been a lot of cost creep, even though CPI has come down, because there's things that aren't reflected in CPI that are still very expensive that are impacting the cost to do business. But there's a few things that are always pretty consistent. If you look at the past 8 or 10 or 12 recessions, there's a few things that have been very consistent. You know, people look at the yield curves.
Yeah.
People look at things like housing starts and shipping logs and manufacturing logs to try and have leading indicators to see what direction the economy is going. I mean, there's a lot of new stuff happening, but still it comes down to like the yield curves and...
Yeah, so I wanted to ask you about the yield curve because that's something that like New York Magazine put out an article of like how the bond market is screaming danger for the economy and the fact that the yield curve has been inverted for, you know, over a year now or around a year.
The bond market is screaming danger for the economy? What do you mean? Like, are they saying like there's going to be a crash and that's the danger?
That's the insinuation, yeah.
A crash of what? Everything? Housing,
stocks?
Not
specified, yeah.
So if you look at all of the recessions in modern times, typically they all have this one outstanding feature where there's an inverted yield curve and short-term rates are higher than the long-term rates. And that's what we have now. I agree with those who rely on the yield curve to predict where we are in the economic cycle and the likelihood of a recession coming. Mm-hmm. What I disagree with is sort of how they word it. They say the inverted yield curve signals danger for the economy. What's dangerous? Like if there's going to be a housing crash, is that dangerous? Maybe for the person that has their house on the market right now, depending on the market you're in. But housing needs to become more affordable. So if there's a housing crash, that may reset things for most of America and most of the home buyers. So that doesn't sound dangerous. That sounds probably good for most people and probably frustrating for some. What else could they mean? A crash of the stock market? Well, I don't know. Last time I looked, the stock market, it's like 35, the Dow's at 35, 36,000 almost. It's very, very high. Typically, it's correlated to earnings, but we seem to have a disconnect recently from earnings, and corporate profits are not the drivers of the Dow and the S&P as they once were. And there's all these other things that drive values of the Dow and the S&P. So if the stock market's crashed, to me, it sounds like a good thing. There'd be a reset. I don't know if it's going to crash. Neither do they, but they're saying danger to the economy. What would be dangerous? It may be dangerous if I'm margined, you know, but that's just a shitty investment strategy. And I shouldn't be margined up so much. And I should account for some sort of crash, especially when you've got an inverted yield curve.
Right.
So what are you really thinking, Mr. Stock Investor? You know, like if you're going to invest, you got to know the deal. You got to know the risks. You got to know the opportunities and threats and weaknesses and of your investment strategy and your portfolio. I can think of 20 things that would be more dangerous and actually dangerous for our economy other than the inverted yield curve signaling a recession. Like, I don't think a recession is going to be bad for our economy. I mean, there will be some winners and losers, as there are with any event. But I think there would be ultimately more winners than losers because I think we need a reset. I'd love to see housing become more affordable. I'd love to see it become more of an incentive to deploy your money. I mean, right now, things are still so expensive and financing so expensive. You get a crappy return on your investment.
You know, it's like when people talk about like, oh, this food's healthy or that food's unhealthy. It's like, well, healthy for what? You know,
right.
I think
Relative to what?
Right.
Define,
relative for what? And same thing for the economy. I think when we talk about a healthy economy or an unhealthy economy, it's the same thing. Healthy for what? That actually ties into my next question, which is, we've talked about recently, actually, about multifamily and whether or not it was the right time to buy multifamily. Recently, I saw John Sabri from multi-housing division at Marcus Millchap. He put out a video saying that it's the time to be aggressive and like we need to preemptively invest in multifamily.
Certain types.
Yeah. Like, do you see investors being overeager to invest in suboptimal deals right now? Like,
I don't see anybody eager to invest anything right now.
Yeah.
I see the smart people looking at certain places, asset classes, and parts of the capital stack to deploy some money. But I don't see people eager to make suboptimal investments at all.
Yeah.
Number one. Number two, there's no inventory in pipeline.
Right.
Like there's nothing happening.
Yeah.
You know, the only people selling are the ones who have to sell, who can't recapitalize, and who can't get a new loan, and who can't get more equity to help out their deal, get a lower LTV.
Yeah.
They're selling, and they're still asking high prices, and I just don't see a lot of transaction volume. I mean, go pick up the phone and call your local Marcus Millichap broker or CBRE broker. These are the guys that peddle all the office buildings and multifamily housing buildings and warehouse buildings. And they ask them what's happening.
Yeah.
They'll take your call. A year ago, no one was taking your call. 2 years ago, no one was taking your call. Now they'll take your call. And they'll ask, how can I help? How can I add value? Because they got nothing going on.
Yeah, so like what should an investor be looking for to give the green light on multifamily or any asset, really?
This environment right now requires such acumen and patience. And the thing I'd recommend to most people right now, I mean, most, again, let me define what I mean when I say most people. If you're a lay person, a layman investor, if you're a beginning or almost intermediate investor, I mean, this is not your environment. The people who are investing right now have huge amounts of capital, have lots of experience, have access to things that the layperson doesn't have access to. You're not going to do a house flip right now. Sorry, house flippers. We used to conflate the word investor with a house flipper for the past 10 years. That industry's gone right now. I can't find occupied, stabilized multifamily deals at metrics that make any sense, so I have to pivot. I have to find other stuff to do. I'm doing preferred equity deals. I'm doing mezz deals. I'm trying to put capital to work in the capital stack where it can earn a mid-high teens return. You know, I no longer need the equity on real estate to do that. If I have the opportunity and if I can drive the car on the path a little bit, I can get to a point where I can deploy capital at a mid to high teens return. I mean, that's pretty good. George, right now you've got appraisals of commercial buildings that still come in very high on paper. If you were to go take the building that just appraised for this very high price and go to sell it, give it to a broker and go sell it, not going to sell for that price. There's been no transaction volume, so you don't have a good, robust comp set. And you can make these reports read any way you like. Really, you can. But I can promise you that if you have an appraisal report that says that your building is worth $50 million and you say, oh, great. And you call up a broker and say, I have an appraisal. It's $50 million. Go list it for 52 and try and strike at 50 because I have an appraisal that says it's worth 50 million. You're going to get offers at 35, 32, 40. You know, that's where the offers are going to come in.
Totally.
You're going to call your broker and say, what's up, man? How come you're not getting me $50 million offers? There's a disconnect in these uncertain times. And when all the variables aren't consistent and it's hard to make investment decisions. Yeah. So for the layperson, I would say, wait until you have a whole lot more money, a whole lot more ability, a whole lot more pipeline and deal flow. And for the professionals out there, write a lot of offers. It was a numbers game before. Now it's really a numbers game. I mean, we write hundreds and hundreds of offers to maybe get one or two that we pursue. Yeah. Not a great environment for the layperson. I mean, I have to keep saying that because I have to fragment out the experienced person with resources and abilities and skills from the layperson. I mean, we've spent so much time talking about how everyone should be an investor and how everyone should get into investing. But I mean, you're asking me about right now, this sliver of time that we're in right now. I think you got to hang out, put your money in a T-bill or money market and earn your 5 or 5.5% and be happy with that until things change. I mean, look at that right there. You can get 5.5% risk-free. Risk-free. Why do I have to buy real estate and be the equity owner of real estate for a 5 or 5.5% return? And that's if you're lucky, because a lot of these real estate deals are like still 4 and 5% return. So why would I do that when I can go to a T-bill or a money market account and earn 5.5?
Which goes back to something we've talked about a lot before, which is if you're not running your numbers and you're just chasing a particular asset because a headline told you to, then it's a recipe for disaster. I wanted to ask you about urban logistics is something I had never heard of. You're probably familiar with it.
Urban logistics. It sounds like me trying to get to my office without being late.
Right, yeah. No, it's multi-story warehouses. That's like the fancy word for it.
Multi-story warehouses.
Yeah, they're calling
like these new modern facilities that you're seeing like Amazon and whoever build.
Absolutely. Yeah. And I guess this has been very common in Asia for like 2 decades, but it's only in the last 5 years that we've been adopting this in the US. I was wondering, do you feel like industrial warehousing as an asset in general is headed in this direction? Like, what do you think about that in the terms of where that places itself in the market?
I love the asset class. I think it's going to be expanding and developing and getting more technologically advanced. more manufacturing happening here in our country over the past several years. I think that's a trend that's going to continue. Manufacturing is going to require warehousing and distribution. It's all part of that network. And so you need upgraded modern facilities. We haven't really invested in warehousing and distribution facilities in our country in decades because we've been importing everything. I think it's a big growth area. And if Amazon's doing it and they're building these hyper modern facilities, watch what they do. I mean, if I was developing these properties, I'd go visit every Amazon facility I can, take notes, and go build something similar at a better price point and try and get other people to lease the space or buy the building.
Yeah, that makes sense. Local Law 18. New
York City.
Yeah, we've touched on this before, but 2 Upper West Side building owners recently filed lawsuits against Airbnb and their tenants, claiming they're violating Local Law 18. For those that don't know, that are listening, Local Law 18 requires Airbnb hosts to register their listings with the city. Has Local Law 18 been helpful, hurtful, something else for New York City property owners? Like, what's your take on that?
I think it's another rule, regulation, and law that's just a burdensome, cumbersome pain in the ass. Local Law 18 forces the property owner to enforce the short-term rental housing ban.
Right.
I mean, they're not geared up for that. They don't have the resources to enforce. They can post a notice in the lobby. They can give a tenant a lease that has language that says you're not allowed to rent out your unit or sublet out your unit, or no Airbnb or no VRBO from your unit.
Yeah.
You can do that, but short of those things, there's no enforcement ability that property owners have. So it's a bit of a joke. Mm-hmm. And I think that these 2 property owners on the Upper West Side that you're referring to should sue. I mean, it's a shame that it has to come to that, but they have to change the law, and they have to change the logistics and the practicality of what it means on a day-to-day basis. Property owners cannot enforce these things. They can clean their hallways, they can fix plumbing, they can replace toilets, they can put on roofs, they can call locksmiths, and they can lease up apartments. But they can't police their building and their tenants. And the other aspect of it is the Local Law 18 and things like that in other places are really a result of the hotel lobby coming into play, because they don't want competition for the hotels that they built in these cities.
Right.
And now there's all this new competition with the short-term housing websites. I mean, I can understand that. Like, the hotel lobby wants to protect their industry. So I say, let them duke it out. Like, let the hotel lobby and the cities and the property owners all figure this out. To ask the property owners to enforce this, it makes zero sense to me.
I'm not going to rob you of the opportunity to earn your own income.
Thank you.
That's a quote from investor and philanthropist Shelby Davis. I heard that
referring
on a podcast.
to what?
Referring to, in this case, Shelby Davis was talking about how much money he was going to give to his children in kind of an inheritance circumstance.
So if he gives a lot of money to his kids, then his kids won't feel motivated to go out and earn their own?
That seems to be the implicit message, yeah. Yeah, and I wanted to touch base with you and see, how do you think about that concept of how important it is to earn your own income, what it contributes to your self-worth?
Contributes everything to my self-worth. I think it's the most important thing you can give. Teach a man to fish. So much of my personality and character comes from my ability to have fought and dragged my body through the weeds and the mud and the sand pits in business and investing. And so the ability for me to earn and produce is so critically connected to how I view myself as a person. And I think for most people it is. So will I leave my kids a lot of money? Probably. I mean, I'm like a nothing on the scale.
Right.
We hear those stories about like the Warren Buffetts and the Bill Gates and people like that who leave the lion's share of their wealth to these charities and don't give their kids anything. But I always question that, because, if you're a Bill Gates and you leave your kid $500 million instead of $50 billion, are you really not leaving them with money? Or even if you leave them with 50, I mean, the kids aren't getting nothing.
Right.
They might get a charitable trust, which they can step in and be the trustee of that charitable trust. And there's certain guidelines and rules that you have to operate the charitable trust by, but it's not like a direct gift to the kid where the kid gets the money. But they control, right? It's not what you own, it's what you control. So they control a bunch of money, which may be just as good as giving it to them directly. I always question that in this type of discussion. Like, are they really not getting money, or are they, is
it more theater?
Mommy and daddy really leaving them piss poor when they die? Like, what's the truth, And then also the other thing I think, which is really interesting, I remember having this conversation with a mentor of mine once. Actual dollars inherited aside, just growing up around someone who talks about money, who exposes you to business or other world topics or other major points of interest in our society, just having that exposure makes you rich and capable in so many different ways. Maybe not directly financially, but it makes you, having been exposed to these conversations and perhaps more than conversations throughout your life, leaves you with an ability to earn later on.
Yeah, absolutely.
I see so many young people today that lack the foundational skills needed to just wake up and tie their own shoes, let alone
earn your own income,
be in business or earn or invest or communication skills, mental health issues, victim mindsets. I think if you're able to raise a kid with compassion and caring, who's intellectually sufficient and who's a good person and who can speak clearly and communicate and those types of things, I think it's way more valuable to leave your child with those things than it is with a lot of money.
Yeah.
Because that's teaching your kid how to fish.
That it's really, the money is a secondary consideration. The money is not really what's either fueling or taking away someone's ability to earn income. It's those other skills or the lack of those skills.
I want to leave my kid with a burning desire to earn income.
Right.
Regardless of what they may inherit or not inherit. Because I know people that have inherited nothing, burning desire to earn.
Yeah.
I also know people that have inherited a lot, burning desire to earn.
Right.
So I don't think the money in and of itself dictates one's ability to earn post-mortem of the parent. Not the money itself. There's so many other things. Like if you fucked up your kid and spoiled your kid, they're probably not going to have an ability to earn. But if you've taught them right, and if you showed them the right way, and if you put them on the right path, and you were a good role model, and you said, do as I do, not do as I say. Things like that instills an ability to earn, in my opinion, among so many other things, but those are just a few.
I have a few rapid fire questions. You don't have to be rapid at all, but these questions, there's less setup, so that's really why they're rapid fire. So what's slowing you down the most?
Distractions, annoying shit.
Yeah.
It gets in my way, and there's so much of it lately that there's more of me to have to hack through with my machete.
When was the last time you asked for help, and when was the last time you were asked for help?
Oh, man. The last time I was asked for help was yesterday. And the last time I asked for help myself was probably yesterday.
Yeah.
I ask for help all the time. In one of our companies, our office is having some shortcomings in how they execute on inventory and purchasing management and some HR issues. I want to have my team be exposed to best practices. So I called a friend that I know who's in that industry. I said, I want the 3 best people, the best, most trophy, golden, gilded people that you know in this business. Give me their email addresses, make an intro for me. I want to reach out to them and ask them for help. I want to ask them if they can give me a little bit of their time so I can pose these questions and seek some guidance. What do they do and how do they handle these problems? Because I want to learn from them. Sent out these 3 emails yesterday. Yeah. So yesterday was absolutely the last time I asked for help. I think you're doing something wrong if you're not constantly asking for help or offering help.
Who do you want to be more like? And who do you want to be less like?
I want to be more like the person that I'm developing into tomorrow and less like the person that I was yesterday.
When was the last time you laughed till you cried?
This morning.
That's good.
Every day. My job every day is to put my daughter to sleep and to wake her up every morning. And I wake her up in the mornings and she has me cracking up in a matter of seconds because she's on. Like she wakes up, she opens up her eyes and she's on. Telling jokes, tickling, squirming around in bed, just laughing, and it gets me to crack up. So this morning, at 7:00 this morning.
That's awesome. And then last question for today, what are your goals for 2024?
I feel like you've asked me this before, so I'm going to tell you with sincerity, stay alive until the following year.
Yeah.
I'm going to keep my eyes open. I'm going to try and pounce if there's an opportunity that presents itself, but otherwise I'm just going to try and stick it out.
Yeah. Fantastic. Well, thank you so much, Peter, for doing episode 99 with us. And
what are we going to do to celebrate the next one?
I don't know. Though we got to talk
big.
that out and have a
Maybe
party.
we should have some guests on.
Yeah, that'd be great. I would love that.
All right.
All right. Well, have a happy holiday, and we'll talk to you soon.
Thank you.
If you like what you just heard, you can subscribe to The Daily Cash Flow on YouTube, Spotify, Apple Podcasts, or wherever you listen to podcasts. And we'd love it if you left us a comment or review. You can follow us on TikTok and Twitter at SiegelCap, and on Instagram at Siegel.cap. As always, if you're an accredited investor, go to SiegelCapital.com and take our survey to see if you qualify to take part in one of our apartment building deals. That's SIEGEL Capital.com.